Okay, trivia time. Time is on the clock. Name 5 things that automatically come to mind when thinking about wealth management or financial advisors. Ready? Go.
That's easy. Bored, painful, rather listen to my in-laws, numbers.
Almost there.
Torture?
We have a winner. Let's tell him what he's won. You've won the PennyWise Financial Podcast. Yes, it's a financial show, but we talk to you like human beings talk. Sure, we do the traditional retirement planning and money management, but we also help plan for other decisions, like buying a car, selling a home, buying vacation properties, or selling a business. We're more than financial advisors to you. PennyWise Financial, brought to you by Monarch Wealth Management. This is PennyWise Financial, and this is Constantine Kitrinos.
Good morning and welcome to the show, PennyWise Financial Podcast with Monarch Wealth Management. Good morning, everyone. This is Constantine here, and I'm joined by Janna and Tommy, our interns from Monarch. Welcome to the show, guys.
Good morning.
So I know we wanted to talk a little bit about what the process looks like. I have a couple questions that clients have asked me over the past couple of weeks, and I know some looming concerns about the market and where things have been and where they're going. We have a newsletter coming out shortly. But guys, let's start off with maybe the client process, because I know a lot of people have this question. Tom, if you were a new client, what kinds of questions do you think you'd have for us? What kind of expectations would you have?
I would say maybe how much am I making for the year or in a certain given time, or how long will it take for my money to make money?
That's a great question. And I could say that a lot of people do come in with those kinds of concerns. How much can I expect to make? If I'm 40 years old and I have a retirement date of, let's say, 62, how much is my average rate of return going to be? And that's a really difficult question to answer, honestly, because everything that we do is custom. So when I meet with you, Tom, your plan is going to look a little different than when I meet with Janna. And we are very goals-based focused in our planning. So we try to, instead of just looking at annual rate of return or average returns or max returns, because I get that a lot. Hey, I want to make as much money as I possibly can. What does that look like? Well, I would step back and say, well, what's your actual goal? If I make you a return of 50%, that sounds great. If half of it gets eaten up in tax because it's a non-retirement account, well, that's not so good. If there's things we can do to modify or change, eliminate, reduce tax, we will. So let's talk about that for just a minute. When we look at goals-based planning and we set a kind of a specific need, it might be buying a home, it might be funding college. Using different types of accounts can help you achieve your goal in a different way. So it's not just about return, but that is a big question. People want to know. You might have heard of the rule of 72. Have you guys heard of that before?
Yeah.
So rule of 72 will help you to understand, if you have an implied rate of return, how many years it will take for that account to double. And I think that's a very fair guide, but we don't live and die by returns. You might have a year where, like last year, you see very high, strong double-digit returns, and then you might have a year where you're negative. And if we just focus on the returns themselves, you might kind of stray from your actual goal or your plan. And typically, most of the clients that come in are looking to retire and have some type of passive income without having to work in retirement. Some people do. They might want to supplement their income as a Walmart greeter. Some people just like to be around people or volunteer. Everybody's retirement looks a little different. But in our first meeting, when we meet with clients, we have an initial consultation, and it's very conversational. Typically, we will ask you a lot of your basic info, name, address, birthday, things like that. And then we look at some other things as far as your risk tolerance. How long do you have? How comfortable are you with the market? What experience do you have already? What types of investments? And so that'll help us to construct a portfolio that's right for you and the type of account, because there's not just one account that works for everyone. Everyone's situation is a little bit different. We talked about insurance a few episodes ago, and I know that's one of the tools that a lot of people will use, especially younger families, to protect against loss of income, but then as an estate planning tool. So your goals will change over time and your plan should change. So in that first meeting, we get kind of a rough draft, a blueprint for where we want to go, but that plan can adapt and change. I like to think of it like a GPS. So you guys, I'm sure, use Google Maps, right? I live and die by that.
Yes.
People, I actually became so reliant on it. It's when I ask for directions, I really just want the address. Pop it in, my GPS tells me where to go. grow. So we should be rerouting and recalculating these plans as life happens, because we might say we want to retire at 65 and all of a sudden there's a big company shakeup and that retirement gets pushed up a little bit. Maybe you just don't want to deal with it anymore. Or maybe your health changes, or maybe your spouse's health changes. So instead of that target date of 65, now we're retiring at 60. Well, that changes everything, because then you have Social Security to worry about. You're drawing from your accounts earlier. You have this kind of gap in income until you do take Social Security. But then we look at strategies on that as well. So there's a lot of moving parts. In that first meeting, I think it's huge to really learn about the customer and what's important to them. And then backing into some of the expected rate of return, I think is part of it, but it's really the goal that we're focused on. Does that make sense?
Yeah.
And so after that initial meeting, that's really where we take the time to dig through the information, formulate a plan, give some options. You guys know we're independent, so we can really work with any company, any stock, any bond, whatever the solution is that makes sense for that client. That's what we're going to do. We're not given a shoebox worth of investments that are pretty good options. And I know some brokerage firms or bank programs, they're limited to that product set because of the liability. It's just easier. We don't look for easier. We look for the right solution for our clients. And so I hope that makes sense. With that, let's take a quick break and we'll be right back with the show. Are you saving and investing on your own and not sure how an independent advisory firm can help? Look, we can all use a hand to correct or improve the way we plan and invest for today and tomorrow. Our mission is to get to know you, build a blueprint, and continue to work on that plan as life happens. We use goal-based planning to help you work towards the things that you really want and need. Don't expect fancy investment jargon or convoluted investment products designed to confuse or impress you. We use proven methods of custom planning that has you at the forefront of that plan. Go ahead, check out our website, ask for references, and start with an initial consultation. We think you'll be pleasantly surprised with your experience. Visit monarchwealthmanagement.com or give us a call at 800-480-1580.
This is PennyWise Financial, and this is Constantine Kitrinos.
Welcome back to PennyWise Financial Podcast. Constantine here with Monarch Wealth Management. We're joined by two interns, Janna and Tommy. Welcome back to the show, guys. We talked about the process, the first part, the first step, the prospecting or the initial consultation. Very conversational, meant to really identify some of your goals and needs and focus, and then really to formulate a plan. So, Janna, I'd ask you, if you were a new client to us, a new prospect, and we just had our first meeting, we had a very good conversation. We learned a little bit about your goals, your pain points, your risk tolerance, your time horizon, and then your experience. What would you expect that next meeting to look and feel like?
Sure. I think I'd expect it to be a little bit more about the numbers rather than like about myself and about what you do. I'd kind of expect to see what your plan would be going forward.
Absolutely. And that's exactly what happens. So in the next meeting, we're not implementing anything, but again, more of a discussion, a proposal of ideas and solutions to meet your needs and your objectives. And we look to do that, and we hope that we're able to provide you with a solution that you're comfortable with and suitable and the right fit. So that ends up becoming very conversational. It's very consultative. We come in, we suggest some things, we talk through the plan, and we may even modify that. And we, depending on the person's involvement or need or desire to be involved, we'll ask for insight and feedback, because at the end of the day, this is your money. This is your retirement. This is your goal. This is your money for your children's college, or this is your retirement income when you decide to hang up the hat and walk away from your job or your business. And in that meeting, it's a little different than the first meeting, because sometimes people think when they come in for the initial consultation, we're going to have solutions ready for them. And I think that would be completely wrong, to have a solution before we even meet. And it takes sometimes a little while to digest what the actual needs are, and then to research and do a little bit of homework on what the next steps are, because things change. Interest rates change. We had fixed products. If I go back to 2006, 2007, we had fixed products that were paying 5, 6, 7% without any deviation. Didn't have anything to do with the stock market. It just paid a fixed rate. Those current rates are between 1 and 2%. I don't know about either one of you, but are you that excited about an account that pays 1 to 2%?
Definitely not.
No, I mean, let's be honest. In those types of accounts have restrictions. They have limitations. It's typically a contract where you have X amount of years where you have to keep the account open, and you have limited withdrawals, taxes are deferred. So you have other kinds of problems that head down the road as you head down the road. But we can find online savings accounts in this day and age where they might even pay more than that. And they're completely liquid. Yeah, you don't have the brick and mortar. And I've had this back in maybe 2007, 2008. I had an online savings account with HSBC. It was online only, and it paid 5.5%. And I think it was even paying more before then. So think about that for a minute. You can go to the stock market, maybe make, I don't know, 5, 6, 7, 8% with risk, losing money, losing principal, losing earnings and interest, or you could go into just a plain vanilla savings account paying 5+%.
That's a huge percentage, I think.
It's huge. And I can tell you guys, it was difficult to do what I do and bring value. And how could, what's the upside? So in those years, I mean, the market probably generated maybe around 8%. So you're taking risk to make an extra 2 or 3%. I mean, we didn't know that. Looking back, it's nice and easy because we know exactly what happened. But when you're in that stage, in that phase where you just don't know, I mean, if you go back to the Carter administration, you have hyperinflation, you had CDs that were paying 15, 16%. But if either one of you needed a mortgage, you were paying just about the same. You guys know what rates are looking like on 30-year mortgages right now? Janna, any idea?
Not sure yet.
Right around 3%. Right around 3. So think about that. A 30-year mortgage, buying a house, 3%. I would gather that you could do better than that in the market over a 30-year period, 3% rate of return. Now, forget about what's happened in the last 6 months, because I know we have a ton of people that call in that were either real estate developers, they're out of a job, they're working from home, they're trading, and they've made 60, 70, 100% in just a couple of months. It's not normal. And they also bought in at probably the lowest point that we're going to see for a while. I don't think those values will be retested that we saw in that late March low, but we don't know. We just don't know. So anyway, going back to the second meeting, we talk about the plan that we formulated. We make some tweaks. We talk about the process and the implementation. And in those 2 meetings, the client has a very good idea if we're a good fit, and we have a good idea if we're able to meet that client's needs. So sometimes we have to turn away a client or a prospect for a number of reasons. Maybe it might not be an attainable goal. I have $100,000. I need to make X, but I need to draw $15,000 a year. It's a 15% rate of withdrawal. It's not going to happen. It's not sustainable. So we can run simulations and try to understand what the probability of success is in a retirement plan. And so we can give those figures to the client so they can understand what their probability of success will be. And those numbers change all the time, but it's a good roadmap. Like I said, I like to use the GPS, the navigation type style, because that changes and we have to revisit that every year. So with that said, we had our first meeting. We discussed what our goals were. Second meeting, we talk about implementation and our ideas. We tweak those. What do you think the cost is for those meetings in implementation? Or what do you think the cost structure looks like? Because this is a big question. A lot of times at both meetings, we have clients asking, well, how much do I owe you for this meeting? Any idea? There's no right or wrong answer.
Probably, I would guess no for like a consultation kind of meeting.
So we are what we call hybrid advisors, which means we are primarily fee-based money managers. And what that means is we charge a percentage of the account, and the account value fluctuates as it goes up, and we're doing a good job managing the assets and we're growing the account for you. We're going to see a higher payout for ourselves, greater return. Now, if we're not doing a good job to manage that money and the account is losing money and depreciating, we're going to make less money too. So we sit on the same side of the table as the client. We want to look at suitable risk-adjusted returns in the account so that we're not taking on additional risk to get those returns, because in a downturn in the market, that account value will reduce as well. And that will kind of put you off the chart, off the course of our goal. Now, on the flip side, Janna, you mentioned something about consultation fee. And so we do have some clients that have money that's managed other places where they want us to kind of take a look or check up on it and give them some feedback analysis. And we do that as well. And before any fee is charged, we always let our clients know it could be a project fee where we have to run a number of calculations, projections, assumptions, and we'll identify what that cost will be. And sometimes it's hourly. So it could be an estate plan review where we're meeting with the attorney and the accountant, the CPA, and figuring out a way to transfer wealth from one generation to the next, maybe buying or selling a business, retiring, coming in and doing some hourly consulting and charging an hourly fee to do that. But traditionally, the majority of our clients that I just described, those two situations where you come in, you meet with the initial consult, you're considering hiring our firm, you come in for the proposal, those clients will bring their accounts over, roll them over, transfer them over, and we manage them for a fee. There's no charge for those two meetings. There will be a fee-based charge for managing the assets. And then for that fee, do either one of you know? So Tom, I guess I'll ask you this. If we're managing your account, your money, and we're charging you a fee, which comes out quarterly, it's a percentage, what else would you expect for that fee? Anything else?
In terms of
Any kind of additional service, let's say you had questions or maybe the number of meetings that you were looking for. How do you think, what else would you expect or want from an advisor to do for you?
I mean, I guess I would expect that you would always be there to answer any questions about the account or anything that I have, or any uncertainties that are like going on. Like say they're watching it on their own and they see it go up and down, like they would have someone there to like kind of calm their nerves or whatever, because they're not normally in that position.
That makes a ton of sense. And that's honestly what we spend a lot of time with, is not only managing the accounts, but explaining what we're doing and why, the rationale. And sometimes it's just another person to talk to where they're maybe reluctant. And this is happening now, right? We have an election year. We have chaos throughout the real world on Main Street and the economy. Stock market is looking like it's having a V-shaped recovery. Are valuations too rich? Is it time to get out or pull some money off the table? Am I making the right choices? Those are all questions that we're getting. There are things that people are thinking about. And sometimes it's just a quick call where they call us and just want to hear from someone else and just some reassurance that they're doing the right things. And Vanguard did a study on this. Jen, I'll ask this question to you. The Vanguard study looked at the value of an advisor as far as how much value they bring to the table as a percentage in returns to a client or prospect. And then they looked at the services that they charge for. Any idea what percentage of a client's account they came up with as far as how much value we bring to the table, percentage-wise?
Well, I would definitely say that you bring more percentage-wise than the actual return on the account, just because they are using you as a resource, like on a daily basis for calls. So as far as an actual percentage, I don't know. I have no idea where to start. I would say maybe it's like 10% increase in like overall, not just like actual account value, but I don't know how to even start calculating that.
So yeah, and that's kind of a hard question. But let me put it this way. Let me rephrase that. So if you had $100,000 and I'm charging you a management fee, what would you expect your fee to be, percentage-wise? Ballpark. Do you guys know the kind of the standard rate?
Like 1% or like 0.5% maybe?
So it would be 1% is kind of the standard. That's around what most advisors charge. Now, depending on the account size, it could be more than that, depending on the type of investments, depending on how they're managing the money. And then the other part is what does it actually include? Is it just money management? Is there other ancillary benefits that we don't know about? Let's take a quick pause. We'll come back and touch more on that subject. We'll be right back with the show. Are you saving and investing on your own and not sure how an independent advisory firm can help? Look, we can all use a hand to correct or improve the way we plan and invest for today and tomorrow. Our mission is to get to know you, build a blueprint, and continue to work on that plan as life happens. We use goal-based planning to help you work towards the things that you really want and need. Don't expect fancy investment jargon or convoluted investment products designed to confuse or impress you. We use proven methods of custom planning that has you at the forefront of that plan. Go ahead, check out our website, ask for references, and start with an initial consultation. We think you'll be pleasantly surprised with your experience. Visit monarchwealthmanagement.com or give us a call at 800-480-1580.
This is PennyWise Financial, and this is Constantine Kitrinos.
Welcome back to PennyWise Financial, brought to you by Monarch Wealth Management. Constantine here, joined by Janna and Tommy, as we talked about the first couple steps or phases in the process of becoming a new client. Coming in, identifying your goals. We take time to digest and look for solutions. We talk about the actual proposal, the process, make tweaks, and then implementation. Now, we started to talk about the fee structure and what that looks like. And we know now that kind of a standard in our business, in our industry, is right around 1% charge for management of the accounts. Smaller accounts will tend to have a higher percentage. Larger accounts will have breakpoints for a discount. And then depending on the fee structure and services that you need or require, there could be additional charges. But with that in mind, we started to talk about this Vanguard survey. And Janna, I was asking you about what value they determined as far as a percentage that we would bring to the table. And I say we, I mean as an advisor, any advisor, and what that average is. Now, you pointed out that you think that value should be more than the actual return, and that I would hope that that would be the case. It doesn't always equate to dollars and cents, though. But let's talk about the implied value as a percentage. So we know that the advisor is charging a fee of about 1%. What do you think Vanguard determined as a percentage of value that we bring to the client?
Probably like 5% or so, like multiplying it by like 5 or so, like that.
Close. Janna, why don't you take a stab at it?
Sure, I would say something along those lines of, I'd probably say about like 6% maybe. I mean, value of what you're bringing to the table.
So those are great numbers. I wish I could say that those were true. It's a little lower than that. It's right around 3%, 3.5%. And so they break that up into 3 different categories. So the first part, which is one that you touched on, you said that you hope the advisor brings an actual positive return than the client would have got on their own. And so that's broken up into a couple different parts. The first part is money management and investment selection. So yeah, we pick stocks. Yes, we pick bonds. Yes, we make tweaks. We rebalance. The other thing that we do from a tax perspective, if it's a non-retirement account, we look at something called tax loss harvesting. I know we've talked about this before in the past, but it's not just about how much we make, but how much we allow the client to keep after tax. So that's important. And so that's one part of it is the money management. The other part is looking at the services that the client needs. They have a question. At the end of the year, there's maybe a need for an RMD. There could be a strategy. An RMD is required mandatory distribution. Once you reach that magical age, which has just changed at the end of 2019, it went from 70 and a half to 72. Once you reach that age, you're going to be required to start taking money out of your retirement accounts. And of course, with that, you'll have to pay tax. So along the way, as we plan on up to and including that age, we want to look for the best strategies to reduce tax, not only for today, but for tomorrow. And there's traditional accounts, there's Roth accounts, there's Roth conversions. We can use life insurance vehicles so that later on we can pull money out tax-free. There's all kinds of strategies. So those strategies that we bring to the table have a percent of value as well. So money management right around 1. The ideas and strategies we talk about is another percentage. And the other percentage is emotional selling. So I started to talk about that at the beginning of the show when I said that we have clients, at least in the last couple of weeks, I've had the question come up more and more. With a looming election, a lot of uncertainty, we've seen some recovery. Do we protect some of those gains and go to cash and then go back into the market? And I can tell you this, that is pulling on your emotional strings, and it's not an investment strategy. Panic selling never saved anyone money. And it's very difficult to sell before something happens. So they're implying that something chaotic will happen. We don't know what that event will be. So if we go back to the election, not to get too political, but when we were looking at the first Trump election, if you asked me if he was going to win or lose, my theory would be that he would have lost. And I thought that the market might continue to rise kind of moderately because there would be some additional restrictions on capitalism. And I know there was a crackdown on drug companies and pharma. So I had some concerns there. And if you asked me if Trump would have won, what would have happened, I would have said the market would go down. And I was partially right. When I saw the news and I saw the market drop 800 plus points, I knew we were heading south. That only lasted for a couple of days. So if you ask me now, who's going to win the election and what's the outcome going to be? I really don't know. I've never seen market timing work well because you have to do it right twice. And that's just to get started. So if you sell out before the election, go to cash and try to buy back in. When do you buy back in? After the results? A lot of the stock moves happen quite quickly within just a couple of days. Say if you miss the 30 best trading days in the year, you could wipe out all your returns. So it's too hard to judge and guess. And yes, we are nimble with some of the portfolio and how we manage money and rebalance. And not everyone agrees with that thesis. But that's the way that we manage money. We find it to be quite effective. And that's how those three components will help to bring value to the client. Now, how about we talked a little bit about financial planning and this GPS strategy. So, Janna, when I meet with you, we define a goal and we track that progress every year. There's something a little bit more involved in that, which is a financial plan. And in that, we look at more details like cash flow. We look at how much you're saving, your debts, repayment, how to best strategize on paying down your mortgage or paying off those vehicles. Or possibly you might be looking at buying a business, starting your own business, buying some real estate, vacation homes. Tom, I'll ask you this question. If you came in and you were thinking of buying a business, what do you think you would pay for me to kind of assess and reevaluate that for you?
I would say would it like a fee? I'd probably be. I would assume that it would be similar to the consolation fee that we were talking about before, with like someone coming to see if they want to open an account with you.
You're absolutely right. A lot of times people will have questions throughout the year where I actually have a client right now looking to sell her home, move to something smaller. It's going to reduce her overall cost. So we do a side-by-side analysis. We look at her current situation, where she's living, her property taxes, her mortgage balance, the interest rate, and then we look at retirement income, sources of pension, Social Security, and withdrawing from her accounts. Then we look at which accounts to withdraw from, non-retirement, Roth, and traditional, or a combination of. And then we compare that and analyze that to the new property, what that looks like. Taking the proceeds from the sale of the house. Do we have a mortgage, which might have a low rate of 3%, 2%, whatever it might be for 15, 20, 30 years, and leverage that and allow her to continue growing her accounts? And I don't know if either one of you know this, but there's even strategies where we can help clients leverage their non-retirement assets, not liquidate and sell to buy a property. They can have their investments continue to grow, but borrow against that at a very, very nominal rate. So think about that for just a minute. Janna wants to buy a house. She has a $200,000 non-retirement account with me. She could sell that $200,000 account and buy that house cash. She'd have no mortgage payment. However, what we didn't tell you is she started off with $100,000. She's doubled her account value. She's made $100,000. She would pay taxes on that $100,000 gain. In lieu of doing that and having taxes and selling the investments that might be doing quite well, she has ways that she can borrow against that asset and leverage it and now still pay cash for the house, reduce closing costs and whatnot. But now she's paying an interest rate maybe in the same neighborhood as a mortgage, around that 2.5%, 3.5%. But she still has that $200,000 account growing for her. So she's able to leverage that. So those are all strategies when you're looking to buy or sell a home, buy or sell a business, maybe even sell the business. How much is it worth? We will run through cash flow analysis, business valuation, to give you an idea of what you could sell your business for. So those are all things that are included as a part of our management services. So we don't have additional fees unless there's something that's outside of your normal plan. That's all inclusive in our price. And I think it's a fair price. I think it's a great way to manage a client's asset and the relationship long term. That makes sense?
Yep.
Any other services that you guys think might be included or should be included? Did I miss anything as far as a question that a prospect might have?
Do you provide any like legal advice ever for, because I know that some wealth management firms do, like, on top of like helping with like tax advice, estate planning, is there anything you do for them as far as like legal concerns?
That's a good question about legal and or tax advice. And I'll say this, I've had several meetings held jointly with the family attorney, the estate planning attorney, the Medicaid planning attorney, and the family and or the client could be mother, father, husband, wife, whatever it might be. I run those joint meetings. I never provide tax advice or legal advice. And there are some firms that do both. I know there's some accounting firms, CPAs, that will manage your money and also do taxes. And I have a problem with that. And the problem is, there's so much to know in this evolving world of investments with respect to tax and valuations and the market and the virus and the election, all kinds of things going on with planning. and mandates and legislation that change so rapidly. How can you keep up with that as well as tax legislation? I feel like you have to focus on your core and what you do and you do well. For me to give tax advice, I think would be a disservice to our clients. Not only am I not qualified or licensed to do that, but I think the professionals that focus on that are a great solution. And we have some clients that prepare their own taxes and they'll try to ask for tax advice from us, but I'll never get tangled in that web. There's certain tax strategies that we can talk about as far as the investment perspective and how things are taxed. So we have tax sensitive vehicles that we can look at, buying municipal bonds, tax loss harvesting, selling some stock or bond positions that are at a loss to offset some gains. There's things we can do, but I like to meet jointly with those professionals. That helps. Tommy, any final questions or thoughts that you think a prospect might have?
No, not that I can think of.
All right, guys. I think that wraps up the show. Thanks again. Thanks for joining PennyWise Financial. Constantine here from Monarch Wealth Management. Janna and Tommy, thanks again.
Yep.
Thank you.
You've been listening to PennyWise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is PennyWise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA and SIPC.